Today, I'm going to share my tier 1 trading strategy with you. And to best do that, I'm going to run you through 8 of the strongest trades I've taken this year, which is my 8th year in the markets, which banked a combined total of 55R. All of these trades have been documented in real time in my live streams, but today I'm going to try and condense as much alpha in as short a time as possible, replaying every entry, exit, and thought process so you can see the exact blueprint to my trading formula. Stay to the end and I'll hand you the A-star playbook that I use to grade every position. Okay, so we're going to work our way backwards, starting with a trade I took on the 11th of June on Ethereum. So just using the replay tool here, you can see that price was bracketing. We are very much range bound here. Marked out this isolated high here at 2788. Essentially what I'm looking for is a similar play to what occurred here, where we take out the highs, sweep the highs, give us some additional triggers that we can use in terms of confluence to bolster a decent trade thesis together. So if I just press play here, we can see what happened as we start to approach that level. First off, we take out the level here, the first sweep takes place, but then you can see price goes on to develop a little bit further. At this point in price, we're looking at the 2-hour time frame here. You can see that we're not looking at a triple drive, but we're looking at a 4 drive on price. The reason being is because we have drive number 1 here, number 2, number 3, and then number 4. Now you can see as price goes for that 4th drive, it's very aggressive here with a big jump up in price as we take out any stops in this area that would have been looking to short or fade this move. In this case, a lot of damage has been done and there are clear momentum signals showing us the price is weakening in this area. The primary pieces of confluence for this trade were divergences. Now you can see across the 2-hour time frame here, we have consistently weakening momentum on the oscillator. All of those 4 spikes you can see here very apparently on the RSI, but as price makes higher highs on every climb, the RSI is making lower highs. We don't really have agreement on the awesome oscillator here. Typically what we want to see is both the awesome oscillator and the RSI diverging as price climbs, but you can also see that on this last leg here, where that aggressive jump up in price takes place, we do then get confluence across the awesome oscillator. My short position was entered around here on that high as price started coming down. We started getting some decent confirmation that the move was in play, and you can see what happens as price moves forward is we get a very, very clean play out on this trade. I ended up closing this trade on the 21st of June, and you can see that basically the rationale was that we'd taken out this low here. And if we dive down to the 30-minute, we can see that price was starting to diverge in this area. As price took out this isolated low here at 2323, we start to get momentum signals that indicate that price may then reverse back to the upside. You can see that's not what actually occurred. Price went for a final leg down, but regardless, I was using the oscillators to give me a guideline on when price may then look to reverse to the upside. And in honesty, a lot of this position closing was based on gut feel. So you can see that I could have squeezed a few more pips out of this trade, but all in all, happy to lock in the 5.5R and move on to the next position. Okay, so the next trade was taken on hype on the hourly time frame on the 8th of May. First off, we have some good higher time frame signals that are showing us that hype is an opportune market to position into on the long side. Reason being is because essentially we reclaimed this range low on the daily time frame here, which is very much an area that we would have expected to hold as resistance if price was going to fail in this area. A combination of the range lows and the high time frame resistance here, but then also you can see a cluster of daily intra supply here as well, which price had no problem just marching right on through, cut through it like butter, reclaimed this daily range low here. And then you can see from this point onwards why it was such a good market to get your eyes onto for a long position. Using that sort of higher time frame narrative and picture, we scoped down to the hourly time frame here and looked for long opportunities. You can see basically what happened is we have this higher time frame SR level, and then price goes on to make this hourly resistance level here, which is a potential level for price to break out of. Essentially what we did is put in the first touch point, second touch point here, third touch point, fourth touch point, then consolidated underneath the resistance level, which is exactly what we want to see for breakouts, reclaimed the level, retested it, and then gave us a really nice confirmation candle here on the retest to enter into the position. As you can see see here, took entry on that hourly candle here. A stop went the other side of consolidation prior to the breakout here. So that's the technical placement always for where you should place your stops in terms of taking breakout trades, and run this trade much higher. But I was heavily stalking hype and was monitoring this market very closely once in this position, so took another position on hype. And the rationale behind this trade was that we tapped down into this pocket of intra demand here, which is formed by an impulse to the upside, a cluster in price, and then an impulse out of the zone. And these are very typical continuation patterns for strong markets. Essentially what we want to be seeing is price to create a range above this intra demand zone, then come down, sweep some lows, and then move on to the upside, which is exactly what we saw here. So we take out this low here at the 23.7s, give or take out the level with the first sweep, and come back down to retest the liquidity at this zone of intra demand here before price finds its floor and then moves on to the upside. So at this point, I'm long 2 positions on hype, documented all of this in great detail in my last live streams, but then decided to close both of these positions out in unison. Could have squeezed a bit more value out of hype. As you can see here, we came up to the 45.8s. I closed these positions at the 35s, but the rationale was that we'd taken out this high here at the 35.7s. In doing so, put in a 4 and 6 hour divergence. You can see here, even though we don't have agreement on the 6 hour, we have a very clean structure on the RSI here. And if we dial down to the 4 hour, we can see we have that agreement on both the RSI and the awesome oscillator. So considering at this point in the double trade, I was up 21.6 R, I thought best to lock in the profits because this is the most juice I've squeezed out of a market in a very long time. Operate in the absence of greed and be very happy with the profits on the table. The next trade is XMR. Now, XMR was very much one of the strongest, if not the strongest market in the altcoin sector at the time of taking these trades. As always, you're looking to long strength, short weakness, and align with the trend as much as possible. And XMR was a great example of that, although it did take 3 stabs, 3 attempts to long this market until I nailed it. And there were some mistakes that were made along the way, but there you go. We live and we learn from every trade experience. The first attempt was taken here on the 15th of May. And you can see basically what happens is price only just closes above the level here from the breakout level that we've marked on the 30-minute time frame. Took my stab and entered market long on that 30-minute close, something like this. And you can see that I was immediately punished for jumping the gun. Essentially, what I could have done better here was wait for a proper confirmation breakout candle. You don't have to zoom in to great detail to see if it has closed above the line or not. One of my rules of thumb is that if you have to zoom in great detail, then it's too much on the line and you have to wait until you get more confirmation in the breakout. Yep, going against my own rules here. It happens. We deviate from the systems. We get excited about markets. We're all human at the end of the day. Wasn't as systematic as I should have been in this area. Got punished and came out of the position manually for a minus 0.5 R. The second trade attempt, I was more patient. You can see here, price moves on and we do get a sustained breakout here, not jumping the gun. We have good technical confirmation to enter. That being said, price has other plans. We don't directly break out in this area. Come back, close underneath that breakout level, which is a signal for me to cut the position. Again, probably minus 0.5 R on this trade as well, but continuing to stalk this market. At this point, I'm down 1 R on the double stabs. But you can see as price comes back over here, reclaims that level another time. My theory in this area was that if price were to break down, that we put in a proper fake out here that would have deviated price, and then locking underneath that breakout level would have puked price and pushed it much lower. But we didn't have that. We had price hold in this area. If we go over to the hourly time frame, you can also see that we have a technical reset on the hourly. What that means is price is overextending, coming down to the midpoint on the RSI. You can see it held here twice, so we have that sort of double support level on the RSI on the hourly, and then we come back up to close past the breakout level once again, and the trigger for execution was this hourly candle here. So you can see we ran this trade up for just over 8 R. The rationale for closing this trade out here was this hourly divergence. You can see a clean counter trade divergence across the RSI and the awesome oscillator, price making higher highs, both the oscillators making lower highs. And although I didn't squeeze it out here, which would have pushed the trade up to around 9.3, closed it slightly lower down as honestly started to get a bit scared on the position, wanted to run this trade much higher, but thought it would nuke here. So hands in the air, there was a bit of emotion involved in the exit of the position. But again, it's just about being responsible, operating in the absence of greed, realizing that an 8R is a very solid win for myself personally anyway, and looked to realize profits. All in all, first stab minus 0.5, second stab minus 0.5, and third stab just over 8R. So around 7R on the XMR position, which is a note to you guys as well. You know, if you have a very valid level to work with and you have the trend in favor, then do not be scared to take multiple stabs as long as you're being responsible and risk managed in doing so, because once it pushes, if it does so, then you can come out heavily on top. Okay, so the next trade is a ton trade that was taken on the 1st of April. Now, ton was a market that I was stalking quite intently from this point here on the 15th of March when we started to get this spike up in price. The market very much in a downtrend, looking to play into that downtrend, look for a sweep of some good highs, some divergences, some speed, etc., and look to play continuation in the markets. So ultimately was stalking this final absolute high here, the 4.1s. And the reason being is because at this point, there's no other local highs that price can stretch for and is the most plausible area for stop losses to accumulate. You can see that as we did so, we had very strong signals across the awesome oscillator here with a triple hump pattern across the awesome oscillator, making lower highs as price continued to make higher highs and then took out that final high. And we also had confluence on the lower time frames. So this is classified as a fractal divergence, meaning we have divergences across two different time frames. We have the 12-hour awesome oscillator signals that took place. And then we also have a tight flat-topped hourly divergence here with double confirmation across the awesome oscillator as well. So we have the higher time frame prevailing wins in our favor. We're playing into this market pro trend. We've been patient waiting for the absolute final high to be taken out. We have good clues about the 12-hour with the awesome oscillator picture. And then we have a clean hourly double divergence to play into as well for a tighter entry. So execution-wise, I didn't quite catch the hourly divergence confirmation candle, which would have slightly tightened up this trade and R. But as price started moving down, we started to get slightly more confirmation on the deviation or sweep of this area. I didn't place my stop directly at the hourly highs at the 4.21s, instead went for the 4.28 in case we decided to go for a third drive on price up here like so, which would have still kept the divergences valid if it did so locally, and a classic mistake that one can make trading divergences. So always good to leave your stop a little bit wider than the local wick, just in case we get a bit more volatility in price before the playout actually occurs. The closing of this position was firstly placing a single limit order here at the 3.333s. This took me 20% out of the position automatically by nature of a bid that was resting here. Then I closed the other 80% manually in this region as price started to stall, netting an average of around 6.7R on the ton trade. Okay, so the next trade was taken on ETH on the 2nd of March. This was a news-related trade, but as most of you know, I do not factor news events into my trading thought process. I was operating on this market still with the same price action toolbox that I use to approach every trade. What I mean by that is we have clear speed as price jumps up here, and then we have price stall and diverge as we take out this final high here at 2533, giving us a very clean trade trigger here, okay? We are pro trend here, as you can see price is in a downtrend. We have a ton of speed here as price climbs up more than 16% across a time span of 9 hours. We get a clean divergence, and if you scope down to the 15-minute, you can see just how strong that signal is across both the RSI and the awesome oscillator. You can see how the awesome oscillator is practically toppling over here. Price grinding into higher highs as the oscillators are both making sustained lower highs. The rationale for this trade was we are pro trend, we are playing into the trend, we have speed, we have a div, and we have a sweep as price takes out this isolated final high here. So the trigger was waiting for this confirmation candle on the divergence here. So we locked in this trade, chanced it with a fairly tight stop, managed to get away with it. And the reason and rationale behind the tight stop was that price had already stretched up way too much in this area. So I expected more of an immediate play out than other divergence plays. Now you can see we did get that immediate play out on price. And as price starts to move downwards, we get these little stalls in price, which create these pockets of intra supply, essentially buffers for our trade. So we're very well protected and comfy in this position as price starts nuking, and essentially was just looking to close this position off at the isolated low, entering at the isolated high, and I didn't have any limits to take me out of the position here. Instead, I was looking for technical reasons to exit, and you can see what happens here. We take out price, and as we do so, we start putting in a 30-minute divergence to the reverse side, aka a bull div, a double bullish divergence across both the RSI and the awesome oscillator, which gave me a good warranted reason to close the position, and I manually cut it here around the 2110s, netting me a total of around 9.4 R. Okay, the next position was ADA, a short taken on the 3rd of March. Again, another trade that was heavily influenced by a pump in the markets caused by some news. People were referring to it as the Trump pump. You can see that ADA didn't shoot up 16% like ETH, instead scorched a monster 84%. Based on the amount that price had stretched in this area, I was hawking this market for a short position, knowing very well from years of experience that pumps like this are very rarely sustained in the markets and normally mean revert. So I decided to make a rare exception, and that exception was to dial down to the super low timeframes. Normally I operate on the hourly time frame, and in incredibly strong markets allow myself to drift down to the 30 and 15-minute timeframes. And on this market I took installments on the 5-minute time frame and also on the 15-minute time frame. So you can see the 15-minute picture here. We take out this high at the 1.1662s. As we do so, we put in this nasty confirmation candle here. We're also sweeping this wick here at the 1.149s that failed to take out the 1.16s. And needless to say, we have a huge amount of speed as confluence to this trade. So when price stretches this much, it leaves a huge inefficiency in its wake. Essentially what that means is it's a period of price devoid of any pockets of liquidity, aka supply or demand. And the theory is that by virtue of that, price can travel back through it with haste. And you can see what happens is we hold this trade all the way down to this level here at the 0.65s, where we've run back through this entire inefficiency. A limit order was resting at the base of this move here and took us nicely out of the position for a near 5R on the trade. Stop loss wise, the same as ETH, we chanced it with a slightly tighter stop. Reason being is because the markets had already stretched massively in this area, and with a near 100% move on ADA, a strong divergence, and taking out an independent high, it was a calculated stab. This was the top of the move. Okay, so the next trade is a link trade taken on the 6th of March. Now we're on the 30-minute time frame here, and you can see that essentially what I was doing at this period of the year was looking to play into the short side of the market as much as possible to play into the higher time frame trend, aka down. Now, I'm sure you're starting to see a pattern across most of the trades I've taken this year in that they are primarily sweeps plus divergences. These tend to be one of my bread and butter setups. And when playing sweeps, we either want to operate at the final high or an independent high. What that means is that there aren't other highs that price could potentially reach for, which makes it a much more responsible area to position short into. So you can see this high here is exactly that at 17.49. Price comes up, takes out this level, and as we do so, puts in a clean 30-minute divergence across the RSI and the awesome oscillator. Now, those of you that have studied my content on divergences will note that this RSI divergence is technically invalidated as we dip down to the 55s here. But that being said, considering the strength of the trend and the area we're operating in, I was happy to bend the rules somewhat in this area, and also considering we had that double divergence confirmation on the awesome oscillator. Now, this trade wasn't as tight as the previous two examples on ADA and ETH. The reason I was able to operate with slightly tighter stops on those trades was because of the amount that they'd already stretched. But I gave this trade a wider berth to play within, just in case we got that final fuck you leg on the divergence, which is very common on these patterns. I wanted to survive this trade and, if anything, build further into the position. But as you can see, we had a near immediate play out as price starts to move down. We come back up, we retest that level at the 17.49s, and then start really making headway down to these lows here. And essentially I had scaled bids in this area. What that means is it's a cluster of bids that I set using a third-party application. but I believe you can find this function on multiple exchanges these days anyway. And the reason I'd set scaled bids in this area was because we were coming into weekly demand here on Link. So it made it a very sensible area to start coming out of the position. And you can see that we spiked down here on the 11th of March, taking us fully out the position, averaging an exit of 12.43 and netting us just over 5R on the trade. Now that you've seen my trading process in full detail, you've got a good grip on the price action principles it takes to prosper in the markets. That being said, trading goes much deeper than just the charts. So I put together a video that's just 1 minute long and gives you pragmatic and actionable steps to reach your goals in the markets. So if you've got that to spare, click here and soak it up.